Welcome back. Now, Southern Sun has reported a strong annual financial performance driven by robust trading in the Western Cape and notable growth in Gauteng. The hotels and leisure group said the successful refurbishments and upgrades contributed to the increased occupancy and rate growth. Southern Sun CEO Marcel van Aulock joins us now to unpack that performance in greater detail. Thank you so much for your time, Marcel. Now, just highlight the level of growth that Southern Sun saw in this reporting period.
So, top line revenue growth grew by 9%. We're quite happy that occupancies finally went over the 60% mark. We did just under 61, and that's the first time since 2019 that we've gotten out of being in the 50s. We had some good rate growth. What's very pleasing for us is that 9% revenue growth translated into 14% at EBITDA and ultimately 34% in our earnings per share. So the Jaws effect, as you call it, is working because we've got a very high fixed cost base. So if you can keep your revenue growth marginally above your cost growth, you get a great profitability answer. And that's what we achieved in the last year.
Really, really pleasing to see that occupancy rates going above 60%. And on that, just talk to me about the drivers of that, really the key trends that are playing out, coming through to the numbers in the different geographies.
Yeah, so it is a story of quite a few different regions, and they have experienced different things. So the Western Cape is the profitability highlight. It's had very good growth in revenue and EBITDA. It's had good volumes, good pricing in particular. The Western Cape is achieving the best pricing in the country by quite a margin.
Okay.
And it's got all the factors that count in its favor. So it's got international tourism, its conference and group business is strong, its local leisure is strong, its business travel is strong. And when they all work together, that's when you sort of hit the perfect recipe. Our fastest growing region was actually Gauteng, particularly the Sandton node, but that did come off a low base. It was the last area to sort of fully recover from the COVID effects. So we had hotels in the prior year that were still sitting in the low 30s and 40s, and those came right. So nice growth, but off a low base. And then our trouble areas were really Durban, which again was event driven. And I do want to emphasize, this is not about the quality of seawater and infrastructure. Those are problems, but they are being, there's a lot of work by the city of Durban attending to that.
Yeah.
The issues we had in this year was just a lack of group and a lack of sort of event activities that is the heartblood of that environment. The Cape Town Convention Centre, the Sandton Convention Centre are both full for a number of years in advance, but that Durban Convention Centre hasn't come right.
Yeah.
We saw this last sort of 10 days or so. We had the Nedbank Cup down at the Mozambique Stadium, followed by Africa and Durban. All our hotels on the beachfront were full for around 10 days. It was spectacular. So when you put the demand drivers in the top, the system works beautifully. But that didn't happen during this year. And a number of events were lost. So Durban was hard. And then Mozambique was a real smack from the political environment, which we didn't see coming. Nobody that I've spoken to saw coming. And worryingly hasn't recovered very quickly either. The violence sort of stemmed from November through to early part of this year. And our view was certainly that once the violence stops, you'll have pent-up demand, things will normalize. And that just hasn't happened. We're still sitting in the low 30s, low 40s occupancy, and the whole city's feeling that. So we are very concerned about the economic impact that that's had on the Mozambique economy.
And in terms of the kind of travel demand that you are experiencing, has there been a significant difference post the government elections here in South Africa?
No, but overall things have improved.
Yeah.
So, the way I always explain hotels, like a dam, and the more pipes you got feeding into it, the fuller your dam's going to get. So whether it's local leisure, whether it's sporting events, corporate travel, big groups and conferences, they're all important. And they vary by property depending on location and nature of the property and so on. And we've seen across the board general improvement in demand. That said, 61% is better than 58%, but we should be in the high 60s. So we reckon there's still quite a road to go here. You will need economic growth, and you will need a further stabilizing of economy and all the good things that brings. But the improvement has been largely across the board. Government has been impacted by, obviously we had elections in the early part of the year. The instability of a change to a GNU, I think, has had some impact. By nature, people will be a little bit scared to put their head above the parapet and say, I want to organize a big conference, because no one wants to be that brave. And then the recent budget debacles has definitely affected government spending, because they don't know what their their budget should have kicked in on 1 March. It hasn't kicked in yet.
Yeah.
So that's had some impact. But overall, government is actually up because of the G20 business that started in October last year. And we've seen a very nice run of G20 and associated activity around G20, whether it be hosting SAPs, whether it be hosting sideline conferences. That's all worked for us very nicely. So it's across the board. And if that can continue, that's how you ultimately feel that you get to the 65, 66, 68 that we want long term.
All right. Well, we do have to wrap up the conversation there, Marcel. Thank you so much. And of course, quite a notable point that you make there, that for everything to work, we need economic growth to come to the fore. I don't know, in an environment of 1.4% economic growth, but seeming that the company is navigating that low growth environment pretty well. I really appreciate your insights. That was Marcel van Aulock, CEO of Southern Sun.